Okay, let's start this video out as a little bit of a reaction video. I'm trying to do this, get a little bit more tech savvy on the channel, so let's see if I can pull this off. I wanted to start specifically at the 2-minute clip, 2-minute starting time of what Jerome Powell just said. This was quite the press conference here. It's the first time, well, not the first time, but it's a time when Jerome's coming out and basically being honest, you know, and I think that he's still skirting the full truth, but at the same time, he's basically saying, hey, we're about to punt this. We're about to basically keep raising the rates, and it's going to get pretty scary, and the market reacted today. I'm sure everybody watching this video, you have all seen that the market pretty much crashed today, about 1,000 points. But let's go, and also precious metals got hit as well. And we're seeing, ironically, a little bit, we'll get into the charts and stuff after playing this little spot here. But let me know in the comments right now how the quality is on the sound on this and everything. But let's see if this works.
The labor market is particularly strong, but it is clearly out of balance, with demand for workers substantially exceeding the supply of available workers. Inflation is running well above 2%, and high inflation has continued to spread through the economy. While the lower inflation readings for July are certainly welcome, a single month's improvement falls far short of what the committee will need to see before we are confident that inflation is moving down.
So, sorry to pause the video, but I wanted to go over real quick the first thing he said right there. The first thing he talked about is that there is still strong jobs out there. Everything's still good on the jobs reports and all of that. I don't buy that. I don't know about you, but I don't think that there is strong jobs out there, and I don't think the workforce is just sitting on the sidelines not filling those slots. I think that he's not being fully honest about how rough the economics is behind the jobs. That's just my personal take on it from what I can see. I mean, I own an auction house. I can see when people are bidding, and I can see the detachment between the wealth and the kind of the middle class and the uber wealthy right now, and the poor in this range, where it basically, I don't feel like there are strong jobs in the market right now. I think that is skewed data, just like the CPI being 8.5%. I think it is much higher than that, and I think they just choose to do select things to pick up when it comes on, when they talk about the jobs. They basically, just how they change the CPI figures from what they use. And ironically, in this video, Powell brings up Paul Volcker. I don't think you should be bringing up Paul Volcker, Powell. Real quick, I want to make this point. I don't think he should be bringing up Paul Volcker, because Paul Volcker inherited the problem. He inherited the problem, and he had to raise the federal funds rate to 20% to stop that problem in the early 80s. That's what Paul Volcker did. Did a good job, but he inherited that problem. Jerome, you caused this problem. Let's be real here. You're nothing like Paul Volcker. You caused this problem, and now you're crying about the problem that you caused. That's what happened here. It's a much different situation. So that's the truth on the matter. I don't like how he brings up Paul Volcker. I don't think that that's right. But anyway, let's keep playing this video. Sorry to pause it.
So we are moving our policy stance purposefully to a level that will be sufficiently restrictive to return inflation to 2%. At our most recent meeting in July, the FOMC raised the target range for the federal funds rate to 2.25% to 2.5%, which is in the Summary of Economic Projections range of estimates of where the federal funds rate is projected to settle in the longer run. In current circumstances, with inflation running far above 2% and the labor market extremely tight, estimates of longer run neutral are not a place to pause or stop. July's increase in the target range was the second.
So he's being very, political in a sense here, and not telling like exactly what that means. What he means is that they want inflation to be around 2%, like they always say. And they're saying that they're bringing the federal funds rate to that. They want the federal funds rate to eventually stay around that range. Right now, they just bumped it over 2%. They're about, I think it's, I'll go over the actual numbers. I have the charts behind this screen here, but they brought it over 2% recently. So they're playing with fire already. But what he's saying here is they want to keep it where it is right now. They would like to keep the federal funds rate where it is right now. However, there's always the however part. This is a specific circumstance where they want to continue to raise rates. So he just said that in a very, political, cordial type way, but that's what he's really getting at, is they would like it to stay where it is right now, but they're going to have to raise rates to a dramatic jump, pretty much is what they're saying. And so I just wanted to break that down really quick for you, because it's very hard to read into the wordage of what these individuals say, but let's keep going.
75 basis point increase in as many meetings, and I said then that another unusually large increase could be appropriate at our next meeting.
There you have it.
We are now about halfway through the intermeeting period. Our decision at the September meeting will depend on the totality of the incoming data and the evolving outlook. At some point, as the stance of monetary policy tightens further, it likely will become appropriate to slow the pace of increases. Restoring price stability will likely require maintaining a restrictive policy stance for some time. The historical record cautions strongly against prematurely loosening policy. Committee participants' most recent individual...
They are scared of loosening policy too soon, is what he just said. So they just did this big jump, 75 basis points to get it over 2% where it's at right now. But they're saying we shouldn't loosen it too soon. We shouldn't loosen it too soon. We have to urge against doing that. But and so basically saying we're not going to go down anytime soon, and we're going to have to go up based on the circumstances that we have. That's what he's saying right now. And then after this, I don't want to do just this whole video of just only this, but I want to kind of break it down and then go over the actual charts that he won't show you. He will not show you the charts I'm about to show you in this video. So if you appreciate that stuff, please hit the like button so more people can see my content. I'm trying to get out there to more people. Really, if you take that second, hit the like button. I really appreciate it. But he's not telling the full truth of what happens when you raise the federal funds rate fast and dramatic the way that he's planning to do it. That's what they're talking about here, about raising the federal funds rate in a fast, dramatic way and continuing to do that and not slowing down like you just said. Because slowing down would give the sentiment that they can, stop doing it. But they're going to keep doing this. So part of me wants to commend Powell for actually, doing the right thing here, because this is what he has to do. But at the end of the day, he caused this problem. The Fed caused this problem. Why are they sitting with trillions and trillions of dollars on their balance sheet? Because they injected this money into the economy. They caused this problem. He's saying that, we can fix it now and we have these tools and stuff. No, they caused the problem. You are nothing like Paul Volcker, Jerome Powell. You are nothing like him. You caused it. Paul Volcker, who raised rates to 20%, by the way, not a measly 2%, not a measly 2-3% to fight what they say is 8 to 9% inflation. I think it's much higher than that when they use the CPI data that Paul Volcker used, ironically, who he recites in this video. It would be a much higher figure, but they changed that data to make it look lower, just like they changed the jobs data, just like they change all the data to make it look a different way. But that's just my personal opinion, and probably many of yours out there. A lot of Austrian economics tend to agree as well, but let's keep going here.
Projections from the June SEP showed the median federal funds rate running slightly below 4% through the end of 2023. Participants will update their projections at the September meeting. Our monetary policy deliberations and decisions build on what we've learned about inflation dynamics, both from the high and volatile inflation of the 1970s and 1980s,
there you have
and from the low and stable inflation of the last quarter century. And in particular, we're drawing on 3 important lessons that I'll highlight. The first lesson is that central banks can and should take responsibility for delivering low and stable inflation. It may seem strange now that central bankers and others once
you should also take responsibility for causing it, Guy.
But as former Chairman
That's what you also should take responsibility.
Both propositions were widely questioned during the Great Inflation period. Today, we regard these questions as settled. Our responsibility to deliver price stability is
shaking with this paper a little bit. You notice that? He's like, oh, God.
It is true that the current high inflation is a global phenomenon, and that many economies around the world face inflation as high or higher than seen here in the United States. It's also true, in my view, that the current high inflation in the United States is the product of strong demand and constrained supply, and that the Fed's tools work principally on aggregate demand.
Oh, they
None
do
of
they?
this diminishes the Federal Reserve's responsibility to carry out our assigned task of achieving price stability. There is clearly a job to do in moderating demand to better align with supply, we are committed to doing that job. The second lesson is that the public's expectations about future inflation can play an important role in setting the path of inflation over time. Today, by many measures, longer-term inflation expectations appear to remain well anchored. That is broadly true of surveys of households, businesses and forecasters, and of market-based measures as well. But that is not grounds for complacency, with inflation having run well above our goal for some time. If the public expects that inflation will remain low and stable over time, then, absent major shocks, it likely will. Unfortunately, the same is true of expectations of high and volatile inflation. During the 1970s, as inflation climbed, the anticipation of high inflation became entrenched in the economic decision-making of businesses and households. The more inflation rose, the more people came to expect it to remain high, and they built that belief into wage and price decisions.
He's specifically bringing up the 70s, and he's going to bring up the 80s as well. And the reason he's doing that is because he's basically preparing people for how bad this really is. Because if they use the same CPI from this time period that they're talking about, inflation right now would be closer to 20%. But they don't use the right CPI. They changed the data up to show only 8.59%. So he's bringing this up to get. It's like, for me, it's like it's almost as if someone's about to deck you, and they're telegraphing what they're about to do. That's what it looks like to me. When I was, growing up, somebody's, looking to deck you. It's like you can tell when they're telegraphing and stuff. So this instead of like putting his hands down, he's showing you that, hey, it's going to happen, and he's bringing up this time period. But again, this time period, it's funny because the real inflation rate is close to what that time period where it was at. That's where the real inflation rate is when you look at the actual CPI data that they used back then. So it's very relevant. And we've talked about it a lot on this channel, that the 70s and the 80s is very relevant to what we're going through right now. And I would argue that we're in stagflation right now. I'd argue that we're in a recession right now. So he's in the position of Paul Volcker. The only difference is that he caused the problem, and Paul Volcker did not cause the problem. Paul Volcker inherited it with, I believe it was with Nixon, and then he's the one who raised the rates and did these dramatic things. That's what happened. So I just don't really like that he doesn't own up to the fact that, hey, we probably shouldn't have a balance sheet with trillions and trillions of dollars on it. I believe it's just under $9 trillion on the Fed balance sheet. He doesn't talk about that, but we're going to go into the actual charts that he won't show. He won't show you the charts I'm about to show you, but we're going to get into that in a second here. But I wanted to get a little bit more in this video here.
As former Chairman Paul Volcker put it at the height of the Great Inflation in 1979, inflation feeds in part on itself. So part of the job of returning to a more stable and more productive economy must be to break the grip of inflationary expectations.
Oh, it looks like they're not allowing me to play this video anymore. Hang on.
One useful insight in 1979, inflation feeds in part on itself. So part of the job of returning to a more stable and more productive economy must be to break the grip of inflationary expectations.
Well, I guess that's my signal to stop watching here and go to the actual charts, I guess. But we pretty much went over everything that we wanted to go over with that video. So this is the federal funds effective rate chart. This is a chart that Powell should be showing you and not me, not some, random YouTuber. But Powell will never show you this chart because this chart proves what's going to happen. When he's bringing the comparisons to the 80s and the 70s, here's the 80s and the 70s right here. This is the federal funds rate. When he talks about how much he's raised rates, it's right here is what they've done. They've raised it from here to here. That's what they've done. So from here to there. It's pretty funny when you slide the chart back a little bit. But hey, Powell wanted to make the comparison to the 70s and the 80s. So let's go ahead and show the real data to the people. So if you appreciate the real data, hit the like button and maybe it can get out to more people. Would appreciate that. And again, they won't. And also, I know that some people were a little bit upset with how much I bashed on college on the video yesterday. I don't apologize. College is a scam, and college doesn't teach you this information either. So there's that as well. I'm sure Powell's a very college-educated individual. Same thing with Yellen. But let's go back to the early 70s here. So when the federal funds rate was raised, something that you notice is when they do a dramatic raise of the federal funds rate. By the way, back in 1972, the time period that he was talking about, the federal funds rate was about 5%. So it was more than double where it is currently back in this time period that they were talking about back before they even raised it. Then they raised it and brought it up to 11% in 1973, and then it went down slightly again, not very much. Then they raised it to the peak here in the 70s, in the early 70s, to 13.31%. Now, something interesting happened when they did this. So when they raised the federal funds rate up, what's this gray period right here? Well, this gray period right here is a recession. So every single time they have raised the federal funds rate in a dramatic way, it has caused this gray period right here, which is a recession. Now, something that they won't talk about at these federal funds meetings is the fact that when you're looking at when you have the rate being, notice how the rate was still relatively high throughout this entire period if you just average it all the way until you got to after the 2009 crisis. So look at how long they kept it under 1%. Now, what does this do? It tightly coils up so that the next recession will be far worse. So the 2009 recession was a very bad recession, and it took a long time. And the reason for that is you see this time period here where it was low for a very long time. That means they were just giving away money really easy, and money was just flowing around. And so that caused a bad situation to happen with the housing, which when they raised the federal funds rate, again, is what caused the recession right after that. So now they're dramatically raising the federal funds rate right now. And not only that, but look at how long it's been tightly coiled up. This is free money being given out. Free money for everybody. Free money, free money, free money. And then now they're going to start raising it dramatically. What do you think is going to happen here? It doesn't take a rocket scientist to figure this out, but I don't think there's enough people actually showing the charts so people can take apart the chart for themselves and make the decision themselves on what they are doing here. But what I get from that video, from what he just said, is that he's going to probably raise the federal funds rate another 75 basis points. I keep raising it to get it to around 5% over here. Ironically, 5% is what caused the housing crisis to unfold in 2008, 2009. And so what do they do every single time? So this is a Paul Volcker period he brought up again. So here's the 70s. They raise the federal funds rate, causes a recession. Then here, you raise the federal funds rate, causes a recession. Raise the federal funds rate, causes a recession. And this was a very devastating recession here in the early 80s. So this is the last stagflation period that we went through, and I'd say now we're back in a stagflation type period. I think that this time period right here is pretty relevant to where we are right here. But the difference is they're not showing the full truth of what's going on. And if they want to stop inflation, which I think inflation is at the same levels as it was back in the Paul Volcker era, which is this era right here, they would have to raise the rates to 20% to stop the inflation that is going on right now. It wouldn't be a measly 75 basis point hike to get it to 2.3%. You're not even at where it was in the 2008 crisis, but they're going to have to raise it up here, 15, 20%. And if they do that, it pops the bubble, which is pretty much why I use the thumbnail for this video of the economics bubble being popped by the dart, because it really is what he's doing here. He's basically signaling to everybody, hey, I'm going to cause a recession. And it's funny because, you have the White House and all these individuals, oh, it's not a recession. You guys don't know what a recession is. Even though we've used the same definition of a recession of negative growth for 2 quarters for a very long time, it is a recession. Any economist will tell you that. But they say it's not a recession. But now Powell is going to double down and pretty much cause a recession. So again, if you look at this chart and you look at every single time they've raised the federal funds rate, causes a recession. Raise it, recession. Raise it, recession. Raised it here, recession. Then from here, bottomed out, raised it, recession. And then now you have a tightly coiled situation of them just giving away free money and printing money like nobody's business. They started to raise it just a little bit, and then the pandemic happened. But this is all tightly coiled free money here. I mean, even this period at 2.4, even right now, it's giving away money way too cheap for the inflation that we're going through. This is a huge tight coil, and then now spiking it and saying he's going to spike it further. He's saying that he'd like to stay here, but they're going to spike it up much higher. And what does that cause when you spike it? Well, it causes a recession. It's the pattern is so obvious, it's ridiculous. And the only difference now is I would argue that this recession is going to be far worse than any other recession because of how long they were giving away free money and how tightly coiled it really is. The other thing, too, is when you look at the velocity of money index, this is basically how much money is sitting under people's mattresses and how worried they are about participating in the economy. Powell likes to bring up that there's strong jobs, but the truth is back in the 70s, the velocity of money was much higher. People were spending money back then. Even in that time period, even in the 80s and the 70s, the velocity of money didn't do nearly what it's doing now. Now you have the velocity of money at lows and still at lows. People are holding on their cash, and that's why you see an artificial jump in the dollar index, because people are afraid to spend money right now. They're being very conservative with their money right now, and it's very clear when you look at the M2, which is basically how much money is being moved around. Not very much is being moved around. Let's go to the charts over here. I mean, dramatic red day. Let me move myself over here. I'm starting to feel like I'm getting pretty tech savvy today. Is this like that whole like reacting to that video? No college taught me how to do this stuff. I got this fancy button right here where I can go, wait, ready for this? Boom. I'm fancy at this now. I got the fancy Joe Rogan mic. I got the fancy button. Boom, boom, boom. No college taught me how to do this. I did it all on my own for free off of YouTube. I learned it on here for free. So somebody could pay $100,000 for some college class on how to do a podcast 101, or you can just get it for free. College is a scam. It makes people like Jerome Powell in the world. We could use less of those. But anyway, let's get back to the chart here. So we're seeing the entire market just sold off based on the news that we got here from Powell. I mean, pretty broad market hit. You have the S&P down 141 points, 3.37% down for the S&P. You have the Dow Jones is down 1,000 on the day, 3% down on the Dow Jones. Keep in mind, if it falls for a dramatic fall, the circuit breakers could go off. And that's when custody comes into play. Things that we've talked about on this channel for a long time. You know, if you, nothing makes you realize that you have no custody of your asset if they can just halt the market from trading if it falls enough. Yeah, no, we're just going to circuit break the entire U.S. stock market. Nobody can trade anything. People tend to not understand. Look it up. Circuit breaker. They implemented it, I believe, after the 2009 crisis. So it's something that can happen where they will literally halt the entire market. Not even the brokerage is able to sell or buy for you, and the whole entire market is halted. So if you have a worse day than we had today, that's something that's scary. And then know what happens there? A lot of tension, a lot of people lining up to get their assets out. And what are they going to do? They're going to flow out of that stock market, and they're going to be sitting on cash. Then when you're sitting on cash and you realize, oh, wait, the cash is going through a major inflation and it's not getting any better, and now they're causing recession, what do you do with that cash? You play hot potato with it before it burns you. So it flows out of here, and it goes into the DXY, which is what we've talked about. I've talked about the hot potato theory quite a bit on my channel, and now we're seeing it unfold. The dollar is showing strength when it shouldn't be, but it is because people are selling off their stocks, and they're going into the DXY, which will show the artificial strength in the DXY here. If you pull back this chart, the dollar hasn't been this strong since 2002. So since 2002, it hasn't been this high on the DXY. So we're seeing this huge artificial strength in the DXY because people are selling out of their stock market, going into dollars, and that's why we see the M2 velocity index so low, because people are sitting on their dollars right now. They're scared and they're afraid of a recession. But the difference this time around is last time that we went through a recession, which was in 2009, the inflation level in 2009 wasn't near what it is today. So if you look at the inflation level in 2008 and 2009, it wasn't even one. It was like 0.09% in 2008, and then 2.72% in 2009. Inflation wasn't nearly as bad back then. In that inflation wasn't as bad, at even close to as bad as it is today. Back in 2008, 2009 is what I mean to say. And what does that tell you? Well, it tells you that there's going to be a hot potato theory unfolding with the dollars. So back then in 2009, it might have made sense to hold those dollars long term. But this time around, people are going to sell out of their equities, go into the dollar index, show an artificial strength in the dollar index, and then the dollar is about to get hotter and hotter and hotter to the point where it then burns you. And what are they going to do? Are you going to keep losing 10%, 20% year over year and let that compound and burn your money as it sits there? The dollars sitting in your bank account are basically, you don't own them anyway. The bank owns them. You realize the custody aspect is something that I like to make sure that people know. Nothing will make people understand what we talk about on when it comes to custody and precious metals and with Bitcoin and all of that. If you have it, if you own it on your own device or whatnot, if you own the gold coin, like I have those gold coins that were being auctioned on mineralexchange.com. If you're not registered to my auction house, mineralexchange.com. I don't think there's a thing in the description, but a lot of people know. But if you're not, go check it out. Maybe I'll show that later in the video. But custody is everything. If I can't go over here, it's like I have a $2,000 gold coin. Here it is. It's right here in front of me. I have it. I don't have to beg the bank for it. I don't have to beg the brokerage to sell it for me. I don't have to go to a gold ETF and say, please sell it in time before the stock market corrects or anything. No, I have it. It's right here. That's what real custody is. And a lot of people are going to understand what real custody is when it's too late. Maybe some people watching this video will learn a little bit more about it, but custody is everything. And not everybody understands that if you don't hold it, you don't own it, period. Somebody else is taking custody for you. And people in 2009, when they experienced what happened with Lehman Brothers, for example, they just lost all their money. They just lost it. There was nothing anyone could do about it, other than like Bank of America, who happened to get bailed out with the people's money to now give you not even an interest rate to compensate for the inflation that they created themselves. Keep in mind, we bailed these bankers out in 2009, and they have the audacity to not even give you 1% on your money. Insane how comfortable the bankers feel in these types of situations. It's unbelievable. So what's my theory on this? I want to just give you my breakdown really quick on what I think plays out. And I talked about it just a second ago, but I think the dollar shows artificial strength for a little while longer. And then something that I like, the comparison I like to make, which I've talked about on the channel before, is the comparison to what happened when the dollar index finally fell. So in the last crisis in 2008, everybody flooded into the dollar index. That's right here. Let me move myself up a little bit. So here's 2008, 2009 here. In 2008, 2009, we had the recession, and you saw the same thing. You saw the artificial strength in the DXY, went up to 89, and then it plummeted from 2009 at the end of the recession to 2011 when it fell down here. This was the time to be accumulating precious metals, because once the dollar index, when you realize the dollar index was artificially strong, the dollar fell from 89.90 and it fell all the way down to 72. And so when you saw that big 20-point correction, what basically happened there is, let's pull up the same time period. So 2008 to 2011, you show silver from that time period, from 2008 to 2011. Silver skyrocketed from the bottom here of $8.70 to $50 an ounce in that exact time period. So when the DXY falls and it finally goes down, silver skyrockets, gold skyrockets. Couldn't be more clear than that. So the DXY is really the gauge that you want to follow. And I think that that's actually the situation that we're in right now is so bullish for precious metals right now, because you're seeing, if the DXY was low, if we saw the DXY, we went to, let me see, the 5-year here. So if the DXY, it's crazy how much artificial strength the dollar is holding with how much they've printed. Keep in mind that most of this basket is usually is just the euro. So when they're saying they're judging against the basket of all the currencies in the world, it's all back to nothing, and most of it is backed by the euro. It's like the DXY is like 60% euro, I believe, something along those lines. So seeing this much strength to me is so artificial. It's such a joke, but that's a good thing for precious metals. As crazy as it is to say that, if you see the DXY this high, that's what you want to see. You can now, if you know what we talk about on the channel here, if you know what precious metals stackers know, and hopefully this will open up some eyes. Maybe it'll make it worthwhile to share my content or subscribe to my channel here. If this is actually valuable information, I don't have a thing to charge anybody. I just want to give this real information out. It's, if we see the DXY this strong, that means you can take advantage of the situation. That means you have an artificially strong dollar, and you happen to have intel that tells you that, hey, this is an artificially strong dollar. What do? You buy assets with it, because now those assets that are valued in dollars are going at a discount. So you could actually, I have a friend that's buying some stuff from Europe, and because the dollar to euro ratio is almost in line right now. There's these huge discounts. People are getting these vacations in Europe and going and buying things in Europe for much less because they're taking advantage of the artificial strength in the dollar right now. So that gives us a very low price on silver, a very low price on gold, when you have a perfect market condition for gold and silver to skyrocket. When you have a perfect market condition for precious metals to skyrocket, they're showing an artificial strength in the dollar, allowing you to purchase metals on the cheap. An ounce of silver is an ounce of silver. An ounce of gold is an ounce of gold. It isn't, at some point, there's going to be a big dramatic understanding that the dollar is just air. And at some point, this has to deflate. And there's going to be competition for the next reserve currency, as Powell has talked about in the past as well. He said, oh, there's room for another reserve currency. What would that do to the price of the dollar, Mr. Powell? What is that going to do? Like it's so obvious. It's crazy. You know, it's like so basically he's gone public, and Powell has said there's going to be room for another reserve currency out there. Okay, so if you're the reserve currency and your dollar's showing artificial strength, and another currency comes out and says we're a reserve currency as well, i.e. kind of the fact that Russia is only accepting rubles for their oil and China is now using their yuan to buy oil from the Saudis and all these different things. They're acting as a reserve currency in a sense because they're doing national transactions with their currency. They're not using the dollar on national transactions, which is basically acting as a reserve currency. That's just what it is. And so, and then you have Powell coming out and saying that there's going to be room for more reserve currencies. Well, that tells me it's like, hey, there's going to be competition and we're very, very loftily valued and there's going to be competition. What's going to happen to the DXY in that scenario? Powell, riddle me that. Can you? Because if you have competition in the thin air market, then probably your thin air is going to be worth less than it is currently because there's competition to use a different thin air, right? So to me, this just is ripe for opportunity. So the people that understand that right now, how do you get around inflation? How do you get around the things that we're going through right now? I would say, I'm going to go back to these charts in a second here. I would say that the way that you can get around inflation and the way that you can, I don't want to just be the person, because I own Mineral Exchange. I own an auction house. If you know my business, I have an incentive there to be big on precious metals. So there's that. I just want to put that out there. But if I was looking at how do I protect myself from inflation, obviously I believe in precious metals. I believe in a small Bitcoin position only if you have custody of it and you understand how to have custody of your digital money. I also think that the tried and true way to protect yourself from inflation is to have your own money printer yourself. So right now, why do I say college is a scam? Because college isn't teaching you how to build a money printer. And what is a money printer? How do you make a cash flow? What business can you get in to get you a cash flow? Because that's something that you can, if you have a t-shirt company, you can change the prices of your t-shirt to compensate for the new inflation levels. That is the truth. So it's not just about selling a product. I also want to give real information out to people. You should be thinking about how do you have a cash flow based business? How do you build a cash flow? How do I build my own money printer? Because you can then change your rates based on how much inflation is happening. You can also change what you accept as payment. There's different things that you can do in that situation. So that's what I think is the only tried and true way to combat inflation is to do something along those lines and be thinking in terms of an entrepreneur. I don't buy the whole logic of only 5% of entrepreneurs make it or whatever they say. I think that the data is going to be totally askewed because now we have supercomputers in our pockets. If you're looking to be an entrepreneur, there is no better time to be an entrepreneur. So, I mean, I'm going to do a little quick ad plug here. But it's not an ad because it's my business. I don't get paid for this. But the point I'm trying to bring up, it drives it home, is I built my auction site. This is my auction site, mineralexchange.com. I built it with no college experience. I built it all myself. I hired the people to help me build it, and I designed it, and I built it, and I did everything that I did because I wanted to build an auction house. I believe in having my own auction house. So I built mineralexchange.com, and this is my company. Nobody's paying me to do this because I own the company, 100% of it. I have no equity partners, nothing like that. But my point is, this is one of the things that I do personally because I wanted to help people if they have a rare bar in their collection and they go down, if you bring one of these gold bars, for example, like if you bring here's something crazy. So these Yellow Daisy refining bars are worth a small fortune for a silver bar. This is a 10-ounce silver bar. Its current bid is $1,500. A lot of people don't believe that, but it's a very rare bar out from like kind of Arizona mining history. And also I have like sealed GSA Morgan sealed with the original registered box paperwork. So nobody's opened that. You don't know what the grades are of these Morgan silver dollars in here. These are super hard to find. Things like that. People will bring that into a local shop and get ripped off. They'll go to a pawn shop and they'll say, hey, I got a 10-ounce silver bar. Oh, we'll give you a spot for it. Well, it turns out that silver bar, this bar, ironically enough, this bar was found by a YouTube subscriber. If you're out there, I won't say your last name, but John, if you're out there, he found this in a pawn shop for spot. He found these 2 bars for spot, called me up, sent them down, and now they're on auction this week. And he's already getting over $3,000 for bars that he probably paid, a few $100 for. Probably $600, something along those lines, $500, something like that. So I wanted to create something so that people could actually get fair market value for their product, and I make 10% on the buyer's premium. So that's my cash flow. When I talk about a cash flow based business, this is my cash flow based business. So I want to tell you that I practice what I preach. I like to be very upfront with how the business operates, and I like to let people know. But obviously, John's very happy with the result here, right? Because the pawn shop or a coin shop, if you brought those in, would be like, yeah, we'll give you $500 for those, $400 for those. We'll give you spot. Maybe we'll give you 50 cents over spot if you're lucky. But the only way to get a true value on something is if you let it go on auction for no reserve. And that's why I built Mineral Exchange. So if you want to do business with me, that's my business. That's my cash flow based business. And I like to be very upfront, and there's no other hidden fees or anything. The business operates on 10%. And that's it. There's no cost to consign. It was free for him to consign. He just sent it down to us, and then we post it up, take nice photos of it. We do the photography, the shipping, the logistics, the invoicing, all that stuff, all for that 10% buyer's premium. That's it. And that's my cash flow based business. That's what I built with Mineral Exchange. So if you want to do business with me, anybody who wins an auction over $1,000, I personally call you. So if you want to talk more about finance, talk more about business, stuff like that, if you win one of these, you're probably going to win it for a decent price because it's actually really cool stuff. But at the same time, I like to personally call people that win a bigger auction. The story behind these gold standard corps is unbelievable. The next video I do, and this is actually very relevant to this video for Powell. So these are actually, what's crazy about these coins, which is that this coin's actually right here, is this company, this Gold Standard Corporation, was launched in the early 80s, the late 70s and early 80s, which is the time period that we're talking about in this video. So I want to make a video on this and actually drop a video talking about these a little bit more. So this gold coin is the one that you see right there on the website. And also there's free sold histories and stuff on the website too. So if anybody wants to kind of learn more about the rare bullion space, you can. And you can actually just access the price history right here, and you can see all the old sales and everything like that, and all the data is given out for free. So if you think there might be a rare bar in your area or something like that, now you can search also here, and you can look all the prior auctions, all the stuff. This has been my kind of life's work building this website, so I'm pretty proud of it. So sorry for doing a little bit of an ad read here, but I own the company. Nobody else owns the company. I'm not paid by anybody. I own 100% of mineralexchange.com. This is my business. I know that there's a lot of different advertisers and stuff, so I don't even have to put in this video. I don't have to put advertisement in it because I own the business. And I'm not paying myself to do this ad. Maybe I should. That might be a good tax idea. But anyway, back to this, the all auctions here. This company came out ironically enough, they were very critical of dropping off the gold standard in the early 70s. So the founder of this company, I'm going to do a whole video and write up on him, but he actually had to go to jail for a lot of different stuff, but really, really crazy history on it. These are fractional pieces that he made, and they were trying to recreate a gold standard. So these coins here, when you look at the coin, hang on, let me show you. They were trying to fix the problems that the Fed's creating right now. And if you look, it says, for integrity, there is no substitute. And they made it a 10-cent piece. The reason it was a 10-cent piece is because it's 1/10 of an ounce of gold. So these are 1/10 gold pieces, and they were making it fractional gold pieces that were in these little packets like this so that people were able to actually barter with their gold. The history on the Gold Standard Corp is unreal. It's such a cool story behind it. And so this is an auction for 10 of those tenths for an ounce of gold. It's currently under melt, so pretty good price on this one. With all the auctions always end on Sunday. But if you're not signed up, mineralexchange.com, it's free to register. You get all the price history for free. If you want to bid, it's just $1 to verify your account to prove that you're authentic, and then you're verified forever to be able to bid. But if you want to check it out, that's just something I wanted to bring up. This was their solution. And then there's just this crazy, I mean, if you look into the story of Deke Pereira, which is another coin that is the 20th version of this, that'll be up on the auction block next week. It's insane. And this, so the 5 ounce that's up on the shelf right there, that's the 5 ounce gold coin. It says sound money means gold, which on the back of it, you'll see that it has the gold logo. So this was their dollar symbol. They were trying to recreate the gold standard, and they used the G right there like it was a dollar, but G5 meant that this is 5 ounces of gold. I love the concept, to be honest with you. I think it's super cool. I almost want to look into doing something like, I'm just scared about what happened to the founders of these companies for doing this. They did this, and then some very shady stuff happened. So Deke got assassinated in his New York offices when he came out with his coin. I think it was 1980 is when his was launched, and then he was assassinated in 1985. That's a whole other video, but this one right here, if you can see, like, so right here, this will be the last thing I talk about on the website, but you see how this one's the half piece. So this is a 1/2 ounce of gold. It says contains a 1/2 ounce of pure gold on the back, and you see the 0.5. So these people in the 80s, the person who founded this company in the 80s was so sick and tired of what the Fed was doing, and so sick and tired of them dropping off the gold standard and not having and creating fiat currency. Because you got to remember, this is 9 years. It's dated 1980. So this is 9 years after dropping off of the gold standard. So this is very recent, and this is all of the people that are on these coins are like Austrian economics individuals. So such a cool concept behind this, and some crazy stuff happened to the founders of these companies. But I'm just really proud to be auctioning that stuff off on the website, and it's exciting to me. So some people have been messaging me like, hey, why are you selling? It's like, no, I'm helping people get cash together. There are people that have rare pieces in their collection and they want to get some cash together, and this might go for a very good premium, and then they're turning around and getting spot silver for it, or changing the money up, or want to sit on a cash position. So that's my whole logistics behind running my auction site, is it's consignments. So it's exciting to see people get real value for their items. And so when I talk about a cash flow based business, that's my cash flow based business. And anybody who wins an auction of mine for over $1,000, I personally call you, and so we can talk about that. But I thought the concept behind these old 70s and 80s pieces is not only relevant to what Powell was talking about from the 70s and 80s. This is what the people were building corporations to try to reenact the gold standard, because they were so fed up with what they were causing. And the founders of these companies, if Deke Pereira was around, if the people that were behind Gold Standard Corporation could see what's happening today, they would have been, you know what they would say? They'd say, I told you so. I told you so. We tried to bring back the gold standard, and they wouldn't let us. And these are the remnants of what they were trying to do, which is crazy. I think it's just way too cool. But anyway, and then this is left over from the video yesterday, talking about what the White House just did in regards to giving money away to pay off student loans. And that's why I've been so vocal about why I think college is a scam. Ironically enough, the reason I wanted to bring this up is you looked at the time period here, 80 to 81. The Paul Volcker era, right? The stagflation era of 80 to 81. What happened in that time period? Well, they started up the money printers. They started giving away money for free. And they started printing and printing and printing a bunch of money just 10 years prior to this. I wish this chart went back a little further, probably done on purpose. It doesn't show you back to the early 70s when they dropped off the gold standard, because this would have been flat. If we were on a gold standard and they weren't allowed to do QE to infinity, then this would have never happened. You would have never had subsidized colleges, because they would have to be more tight with their spending. This is the downfall of nations. Forever this has happened. They overprint their money supply, and then the money becomes worthless and the people suffer. It's so obvious. And so they talk about, oh, the cost of attending college has skyrocketed. Has it? Has it? Because you printed a bunch of money and you subsidize the college system, and you don't allow fair competition. You don't allow it to be in an Austrian economics type format. You let Keynesian economics cause this. It's the Keynesians that caused this, because they printed money to infinity, and then you got Powell coming out there and crying about the things that they caused themselves. It's the Keynesians that caused these problems. And then the colleges don't even teach them. They teach Keynesian economics in the colleges that cause this problem by teaching Keynesian economics. They use Keynesian economics to indoctrinate societies, to then teach them Keynesian economics and not let them know that that was the problem in the first place that causes it. Did it get you aggravated? Because it gets me aggravated. And yes, I think that I thought about it for a little bit. Like, you ever post something and then you wake up the next morning and you're like, maybe shouldn't have said that. Maybe that was a little harsh. There might be some good colleges out there, some trade schools and this and that. And that's a little different. The trade school thing's a little different. And I woke up this morning, I'm like, posted that on my Instagram. If you follow me on Instagram, I posted the thing on Instagram talking about why I think college is a scam. And I've thought about it for a little bit and I went, you know what? I'm tripling down on it. College is absolutely a scam. There should be fair market competition. The government should not be subsidizing loans to 18-year-olds. You want to know how I know college is a scam? You're 18 years old. You got to say you have a cash flow business and you've built something nice. Maybe you built something, like if, for example, even with me, I'm 29 years old. I have a business that's profitable, do hundreds of thousands in revenue every month, and I can't go to the bank and get loans from them very easily. Now they're starting to change the tune a little bit recently. But when I was starting out, it's hard to get a loan. And by the way, if you want a loan from the bank, they're not going to give it to you at less than 1% like they pay you on your money. If you give the bank money, they go, oh, you're lucky to use our platform. We'll hold your money and we'll pay you nothing to hold your money. But if you want money, if God forbid you want money from the bank, they're charging you a small fortune in interest. Shady characters out there. But what I was getting at, if you're 18 years old, because college subsidized the loans, because college is giving away the money for really the people's money, and they're basically indoctrinating you in a way and making you forced to be stuck in a secured loan. There's a big difference between a secured and an unsecured debt. That's another thing they don't teach you in college. An unsecured debt is your credit card where you can go bankrupt, right? And you could start fresh. I don't recommend it, but you could. With a secured loan, it's on your life. It's on your assets. College loan specifically is on your life, so you can't get away from those loans no matter what you do. You can't even die out of it, I don't believe. So they do that on purpose. So what a perfect way to indoctrinate people, right? You're 18 years old. You don't focus on being, do the American dream thing, Johnny. Don't focus on that. You're 18 and you should be settling for a fallback right now. Don't take the big risk. Don't go for plan A. Settle for the fallback, plan B. Go to college. Put yourself $100,000 in debt. You'll get a job. You got a fancy college degree. There's going to be somebody to hire you to pay you $200,000 or whatever, right? And then they get out of college and they realize they just literally wore a gray shirt in a group of gray, and they thought that they'd come out vibrant color. They thought, but it turns out they're still wearing a gray shirt, and they learned the same information pertaining to the same jobs as everybody else, took the same tests as everybody else, and they think they're different. They actually think that, and they paid money to do that. How cute. How cute. I'm not pulling back at all on that. This is caused specifically by them printing money and subsidizing this situation. The government can't do anything right. The government is so incapable that they're run by the college students themselves that were incapable of understanding what the debt they were getting into. They're just as incapable as a college student, the people that run the show and the Fed. That's how I feel about it. So again, it's funny because they use the problems that they create, just like the Fed did this. They use the problems that they create to then say that they're going to fix the problem. It's literally like getting punched in the jaw and then the person going, okay, let me get you a bag of ice. It's like, you just punched me in the jaw, my guy. My jaw hurts. I don't care about your ice bag. You better, So it's like, it literally is that. It's like, oh, here's some ice. Here's some ice for you. It's like, what? Exactly? And oh, by the way, you got to pay for the ice as well. Here's some ice for you, but we're going to make you pay for this ice that we're giving you to put on your jaw that we just hit you. It's literally what they do. It's insane. It's insane. And so, like, do I stand for the idea of giving college kids free stuff? No, they're a bunch of spoiled brats. They should suck up the debt that they caused themselves, and they should bear the burden. They knew what they were getting involved in. Let them learn a lesson. Teach them a lesson. You know what you can do? This is where I'll be nice. I'll be nice in this way. They shouldn't have to pay interest on the loan. I think what they should do, if these individuals had any competence at any way, shape, or form, they should have to pay back the debt to the people that they took for their fancy education. To me, going and getting educated and getting a loan to get educated, that to me is basically, that's a privilege. That's not something you're entitled to. I lived homeless building my company. I don't care at all for these individuals that are crying about being in debt because they wanted to be privileged and go read out of a textbook in a fancy library. I read my book in the back of my car, sleeping in the back of my car, traveling state to state, hustling pawn shops to start what I started. I have no sympathy for these prima donnas. No sympathy at all. So lick your wounds, pay your debts, handle your business, be a strong American about it, handle your debts, suck it up. But I will say that they shouldn't be being paid inflation. They shouldn't have to pay interest rates on their debt. That's one thing I will say. So the college kids that are watching this and they're probably crying a little bit, probably going to write some bad comments or something like that, I will say that. I think they shouldn't have inflation or interest rates on the loan that they gave you. They should get out of the interest rates. That's my opinion on it. And I think that would be very helpful to college kids, knowing that they can pay down their loans without accumulating unfair interests on loans like that. That's what I think should be happening here. And then after that, just get out of college altogether and let them have fair competition. I've talked about this in the past, how I learned how to negotiate from Chris Voss. I learned how to cook from Gordon Ramsay. I learned business skills from Richard Branson. And I'm not sponsored by this company. This isn't an ad, but it's like that master class or whatever. And I paid $180 for that. Would you rather learn from a billionaire how to start a business, or would you rather learn from Joe Schmo at your college, in your college class, the professor in your college class? Would you really rather listen to that guy? Like, think about it for a little bit. Would you rather go on YouTube and learn from people that actually built a podcast? Like for this podcast, for example, I literally looked up Joe Rogan's microphone and found out it's the Shure SB, whatever what this mic is, ordered it, got all the parts in, and then I realized, oh, I need a Rodecaster to do that. Oh, I need a Stream Deck to do that. And I just built it all myself by learning stuff online for free. They might go to an 18-year-old and go, oh, you want to start a podcast? Well, did you know that Yale has a very good podcast course? And it's really will teach you everything about podcasting. Don't listen to the people that do it for free on YouTube. Pay us $100,000 to go to Radio Class 101. You'll have to take about 40 prerequisites and pay us for that time and those prerequisites that you didn't even want to study, but you're going to have to do that because it's a prerequisite. And it's going to take you 4 years, even though you can learn this information in a couple months. 4 years at our time and our scheduling, and we're going to test you on it and stress you out that entire time. And you're going to pay us a small fortune to do that. You scammers, you prima donna, pretentious scammers. I have no respect for Harvard, Yale, Ivy League schools. They're rich as can be. They charge a fortune to go there, and their degrees are worthless or next to worthless. I'm sick of them. And so I think I'm specifically talking also about the high-price colleges. So I want to be specific about that as well. There could be trade schools out there. There could be colleges that teach you for a lower amount. But I want to see more competition. What I talk about in my videos is Austrian economics and things like that. So I talk about why this iPhone right here has a supercomputer in it, super fast, crazy camera on the back of it. The video is as good as a camera that was like 20 grand 10 years ago. The reason this is $1,000 is because you allowed competition to unfold. The reason the crappy Nokias don't exist anymore and the Motorola Razrs and all of that don't exist anymore is because there was competition and Steve Jobs won. Competition is what happens in a free market economy. It's what happens in capitalism. You get competition, prices go down, the quality of the products go up. That's why you have an iPhone for $1,000 when it should be $1 million. This thing, like if an iPhone was only available for $100,000, I think it's so valuable that I would save up the money to pay $100,000 for an iPhone. I really would. If it was that more of an exclusive thing and it was that expensive because the technology, like, wow, it's a crazy technology. It's $100 grand for this. I mean, it would be worth that. But the reason it's so cheap and the reason it's so available for everybody to be watching this video on these iPhones is because of competition. Competition unfolded, and that's what happened, right? But nobody wants to talk about how competition causes prices to go down. No, why is college so expensive? Because they don't allow competition and the government subsidizes everything. They give you these BS loans when you're 18 years old, and you take these loans and you get stuck in a bunch of debt, and it's because the government themselves subsidize it, and then they're coming back to use more of the people's money, more subsidization of the people's money to cause it to be even worse. Ironically, at the same time that the Fed is tightening the policies, they're giving away more of the people's money over there and smiling about it, acting like they're helping you. They're not helping you. They're indoctrinating you. Period. That's what's happening right now. And then once you've put up your pot committed, why do you think college is 4 years? Why do you think college is 4 years? It could be 1 year to learn what you want to learn in college. You want to learn entrepreneurship. You want to learn some stuff. It could take a year, 6 months, maybe even less than that if you get passionate about it. Why is it 4 years? Because that's a good amount of time to compound debt. That's a good amount of time for you to compound debt. If you're paying me a small fortune, I want you to stick in those cubicles for as long as I can put you in that library. I want to put you in them chairs as long as I can so you can accumulate debt, and then you're owed everything to me. You owe your life to me pretty much at that point because the debt is a secured debt on your life. What a great business model to indoctrinate kids. What a great business model. I thought about it all day today, and it's like I'm not backing down on that one bit. College is a blatant scam, and it's criminal. It's criminal. Don't pay for an education. Get it for free. You also don't need to go and learn everything when you're 18 years old. You have 10 years to fail. Why don't you fail for 10 years and learn some lessons about life and then think about going to college? And you might realize how expensive it is, how hard it is to get 10 grand, 20 grand together. It ain't easy. They give away this money like when they're together. It was hard. I remember it took me a while to get that kind of money together when I started from zero or negative money at that time. But they make it seem like, oh yeah, we deserve this. We're entitled to this $10,000, this $20,000. You're not entitled to nothing. You're not entitled to nothing. You know what you're entitled to in the United States of America? You're entitled to life, liberty, and the pursuit of happiness. You're not entitled to happiness. You're entitled to the pursuit, a fair pursuit of your happiness in freedom. But people don't want freedom. They want free stuff. That's what they want. They want more free stuff. Give me more free stuff. These entrepreneurs that worked hard and built an American dream and were part of the 5% of entrepreneurs that succeeded, those are the people that owe us normal individuals that went to college and wore a gray shirt in a world of gray and act like we're colorful. No, you're not. You're gray. You're nothing different. You paid a small fortune to be the same as everybody else around you. Cry about it. I'm not paying your bills for you. Nobody picked up the tab for me when I was living in the back of my car. Nobody gave me a hot shower when I needed, when I had to go to the gym for that. I'm sick and tired of these entitled kids with their signs up saying, hey, people that work hard, make sure that you pay these bills for us because we're entitled. Schools should be free. You're right. Schools shouldn't be free. Schools should be more effective and cheap because there should be fair competition there and it shouldn't be subsidized. If the government got out of the college system and it wasn't subsidizing it, it would clearly go down in price. Why do you think, how in the world am I learning entrepreneurship from Richard Branson or whatever? I'm doing, this Masterworks company should be paying me some money. They're really not because I just think it's a strong talking point. How in the world, how expensive would it be to go to Richard Branson's entrepreneur class at Yale? You know? But you can just sit on your butt at home, pay $180 and have a 30-minute seminar listening to the guy. How expensive would it be to go to a negotiation class and like all these different things? And you can do, the reason for that is there's competition online for education. When you have competition, like right now on YouTube, there's competition to have subscribers. So I'm trying to provide you real value so that you actually click that subscribe button. And if I don't provide you real value, you won't click the subscribe button. If I don't provide people real value with my auction business, then, and also, why do you think my fees are lower than other auction houses? Other auction houses charge a 20% buyer's premium and a 10% consigning fee. Right off the top. They charge 30% cuts. I dropped it down to 10%. Know what I did? I competed in the market. I said, hey, there's a 10% is good enough for me. I'll make 10% on the buyer's premium and make it free to consign with mineral exchange. And then know what? I'm getting items that other auction houses aren't getting. So other auction houses would have liked to get those yellow daisies and all those gold bars. And you know what? I'm setting new high price points because of that. The Rothschild gold collection that we just sold last week, you can check the auction history on that. That was new high price points for Rothschild bars. And that's all because I changed the business dynamics. I changed what these auction houses were doing. They were going 30%. I go, I'll lower the overhead and make it 10%. Sounds like I can be competitive in that market. And that's what should be happening with the college education system. The college education system should not be subsidized. The healthcare system should not be subsidized. All of the things that are subsidized. Why is healthcare so expensive? The reason it's so expensive is because the government meddles with it and subsidizes it. When you print money and you just throw money at things, none of these politicians are careful about their calculations. They just make estimates and throw everything at the wall and hope something sticks. And turns out nothing sticks. It just makes the money worth less because they printed too much of it and they subsidize stuff like this. This chart doesn't show how bad of a crisis it is. It shows how bad of a government problem we have, that they subsidize everything and they ruin fair market competition. People should be allowed to fail. What would have happened in 2009 if we didn't bail out Bank of America? In 2009, if we didn't bail out Bank of America and we let all these banks fail, you think they would have competed a little bit more? You think they'd feel so comfy giving us less than 1% on our capital? No, they would know what it's like to fail and they would compete. And I would bet that these banks would be paying you 12% a year to hold on to your capital. That's what they would be doing because they'd have to compete with one another. You want to hold my money, guy. You want to charge me 20% on these credit cards or whatever. You want to hold my money. Well, if you want to hold my money, you better be acting fair because this other bank down the street is trying to compete with you. And they're paying me 8% on my capital. How about you pay? It just pisses me off. The whole thing about it all. I hope that it's not too much of a rant or ramble, but I hope it makes it worthwhile to understand my point of view on this all. But yeah, I get riled up on this category, and I'm sad for my country. I'm sad for my country because we're being lied to, and they're blatantly hiding what they're doing behind. I mean, here's a sick, twisted one. The same people behind this talked about how they're doing the Inflation Reduction Act. The Inflation Reduction Act is spending $400 billion on climate stuff. It has nothing to do with reducing inflation, but they label it Inflation Reduction Act, the Affordable Care Act that causes care to be more expensive. The Inflation Reduction Act that literally is printing $400 billion plus to then cause more inflation. It's insane. It's insane. The audacity. Like, how cruel do you have to be to have your whole nation suffering from inflation, and these individuals have the audacity to go out there and say, oh, we're doing an Inflation Reduction Act. And then you got Pelosi all out there like this. Yeah, we got the climate crisis thing gone through. You know, it's like, no, it was supposed to be about inflation. And here you are causing what you're causing, worse inflation. You can't, you're going to make a bunch of windmills and that's going to stop inflation? That's the logic behind these college educated fools that run this country. That's the logic. Oh, we'll make some windmills. That'll stop inflation. Got them. We'll subsidize electric cars. That'll stop inflation. For sure it will. Because those cars operate on coal, right? They plug into the wall and 90% of it is using coal, right? So subsidizing the electric cars is going to help it. Right? Yeah, for sure. For sure. It's unreal. Unreal. And maybe I think a little bit outside of the matrix or something because I don't abide by the status quo of society, I guess. I look at a college kid and I go like, wow, I see these resumes that say I went to college, I got this, I got that. And it's like, show me how much value you provide. Can you code? Are you good at coding? Are you good at social media? Those are skills that will make you a fortune as a kid. If you're 18 years old, I'd be learning how every social media works and how to market on every social media. That's the greatest skill set ever. I would love to have a social media 101 kid in here. You don't need no college degree for that. Show me that you're good at operating on Instagram. I need some help running Instagram ads and stuff. Show me that. You don't need any college degree. I'm sick of college. These kids, they're like entitled, and I want the kid that was like me. I want a homeless kid that's a hard worker, and is like, hey, I can work really hard. I got some ideas. It's just it's the whole situation is rough, but. Yeah, I genuinely, the problem becomes is like the kids that gone to college, the kids that go through all of this, and they're talking about, that this is such a big problem, and this and that. Well, they've made them so pot committed. Like, this is exactly, like, why is college the way that it is? And this is kind of going off on a little bit of a tangent here, but I have a good point about it is, what does a multi-level marketing, MLM do? The first thing they do, they get you to get pot committed. So buy $500 worth of the product, $1,000 worth of the product. Now that you're pot committed, you're going to tell your friends about it. Oh, I got this great company. We sell these energy drinks and this and that. And everybody knows these multi-level marketing companies, right? So they get involved in this system because they have put money in. You get them pot committed first. Otherwise, they're not going to tell their friends about it. They're not going to be so excited about it. So what do? You give them a loan. You subsidize that loan. You print a bunch of money. Then you get them pot committed and do 4 years at this institution. After you do 4 years and you're $100,000 in debt, you're so pot committed that you want others to believe that you did a good decision, that you made the right decision to do this. And so you're going to tell yourself and justify all of these different things. Well, I networked with the right people, and I did this, and I got that, and I learned this. But meanwhile, most of these college kids, if they're honest with themselves, in the back of their mind, they go, wow, I really spent a lot of money in 4 years of my life doing something that I really am not very passionate about. And it's depressing. And the truth is they got very pot committed. And that's the plan. That's why it takes 4 years. Like a doctor. Why does a doctor need to go through 8 years of school? It's a long. I mean, I understand it's an important profession, but 8 years, a lawyer, all these different things that take so much time. It's like, could that not have been compacted a little bit, or was somebody trying to accumulate debt on you? That's how I feel about it. But a lot of it, and I feel sorry for a lot of the college kids because they're in a bunch of debt. That I think that. It's kind of cruel that they don't do that. It's like they're talking about giving you a measly $10,000 or $20,000. If I had $100,000 in debt and they were trying to give me $10,000 or $20,000, I would say keep the $10,000 or $20,000 and just don't charge me interest. How about that? I would much rather take that. But then again, I might know a little bit more about finance than a college kid. But if I was a college kid, I would think to myself, hey, how much interest are they going to accumulate on me over the next 10, 20 years? Well, maybe it would be a nice idea to not charge them interest on these big loans and not give people's money to them. Don't give the people's money to them. What did I have to do that makes me have to pay for a college kid? I didn't get to go to college. I would have loved for somebody to pay for me to go party in a college. That would have been great. I would have enjoyed that. But I didn't. I worked hard and I built a business, right? And so when I look at that situation there, it's like, okay, well, I feel sorry for you. I think a lot of you were entrapped and you didn't know what you were getting into. I do feel sorry for you. I think that it wasn't fair how much they charged you to go to college and all that. I think it's very overpriced and not worth it at all. But you signed up for it. So I think that you should pay it back, but not have to charge interest on it. Maybe work with them on a payment structure, something along those lines. And then you want to know what happens there? I brought this up in the last video. If you allow the government to print you out of your problems, it's the same thing as if what's going to happen, and this is something I brought up yesterday in that video. If you want to watch that video yesterday, it's pretty long actually. It was another live stream we did yesterday. But if you want to watch it after this video, you can, talking about how I think college is a scam. But if you made DUIs legal, if you forgave DUIs, not saying this is a good idea. I'm saying if you did do that, how many more people would drive drunk? How many more people would have an extra drink? If you changed it to 0.08 or whatever it is now to 0.1 or whatever you can change it to and made it a little bit higher, do you think people will drink more and drive more? Probably. They're probably going to be a bit more risky with it because you forgave it. You forgave it. You didn't say no. And you want to know what happens? Because we don't forgive that and they crack down so hard on that, we all have a friend that has told you their horror story of how I can't believe I drank 3 beers and now after I drank, just because I had a third one, not 2, I had 3, now I got to pay $10,000 and I got to go to courts and I can't drive because we all hear that friend talk about that. Now we don't take that risk because somebody paid the piper. It had the consequences, right? If you take away the consequences, more people are going to get put in the situation that caused those consequences in the first place, that caused somebody to have to go through those consequences. So when I look at this, it's exactly like that. Oh, you're going to forgive these college kids for putting themselves in debt and going to some fancy college, and you're going to give them 10,000 of the people's money, 20,000 of the people's money, and make them pick up the bill that are working their own small business and just trying to stay alive themselves. They're going to pick up the tab for these prima donna spoiled brats to go to college. That's what's going to happen. That's what you believe in, Elizabeth Warren. You believe in indoctrinating society more, because if you do that, more kids now that are 18 years old won't have the parents going, no, actually college wasn't really worth it for us. It took us a long time to pay that off. It was really rough. If you have a good idea, maybe check that out before going to college. Maybe explore your other idea, because college is way too expensive, really. If you don't let people go through it, they're not going to tell the younger generations that it wasn't worth it for them. They're going to lie to themselves and say, oh, well, we got bailed out. Maybe you'll get bailed out too. Go ahead and go to college. People picked up the tab for us to go to college. Maybe the thing is you don't get to bear the burden, and that burden, it's not just about helping those people. It's about the multiple levels of people. It's about the people below and the people above in generations. So the generations above this generation that's getting bailed out right here are going to be very sad. They're going to be very sad because they're like, hey, I paid my student loans off. I had to work really hard. And we had somebody in the live stream yesterday talking about that, how they paid, $15,000 off in student loans. And then now this comes out that would have gotten them out of it, right? So it's hurtful to the generations above you. And then the generations beneath you suffer as well because they don't get the truth told to them. They don't get the truth told to them that, hey, it wasn't worth it for us. I had to pay a lot of money in those student loans. When I had to pay those off, it was rough. And so both sides of the generation, they all mess up. They all get messed up by this because nobody gets to learn from their actions. They don't get the consequences. It's sad. It's sad because really the best lessons I've ever had in my life, and most people that I know, is from your failures. So why are they like, and this is why I'm so opposed to the college system as a whole, because so many kids are being told, like, focus on plan A, but you learn so much more by failing forward. By failing forward, that's how you learn the lessons. That's why, all the things that I've ever built, I've built it by failing. God, I failed so many times. It wasn't like I was like a sure thing. I didn't plan it out and it was like, oh, that's the way I'm going to go right off the bat. No, you fail so many times going forward, and they don't prepare kids for failure. They prepare them for plan B, taking the fallback. Oh, set yourself up for a fallback. You'll get a job at this fancy corporation and you'll get a fancy resume and put yourself in debt and go on a fallback. What would you do with $100,000 in 4 years of your time? If you're 18 years old right now, you got $100,000 liquid cash in front of you in 4 years of your time. No bank's going to give you that for your own endeavors, but if you had $100,000 in 4 years of your time, what are you going to do with that? You could start this coconut beverage company and make millions of dollars with it. I see some super chats in here. Let's go over some of these super chats. I don't ever miss a super chat, by the way. I scroll up and I find them. I did see a few of those go through. Let me go through this. I see a super chat. Brian Cabrera. You just gave me a super chat for $10. I appreciate that. I didn't have any questions or anything. Thank you. Much appreciated, Brian. Let me go up a little higher. VT247. VT247. If you're not, you should subscribe to his channel. He's been around for a long time on my channel. I really appreciate that, man. He goes, if we can get Rob to 200 likes, maybe he'll flip the Sultan Sand Timer. Maybe I will. You know what? Here you go. I'll do it without the likes this time, but I'd appreciate the likes. If you hit the like button, I'd appreciate it, but I'll flip it without it. But if you could hit the like, it would mean a lot. I appreciate you, VT. Thank you, man. Let me go up a little bit more. A lot of comments. I was rambling for a while there. I apologize for my ranting. I think I got to all of them. VT247, Brian Cabrera. All right. I never miss those super chats. It mean a lot to me that you do that. Let me go down a bit. See another one. Eric. Eric in the house gave a $4.99, says, hippo character with stars growing in his eyes, pumping his arms in the air with the word hype pulsating above him. I don't know what that means exactly. Are you referring to me? I don't know if I look like a hippo or not. It's possible, I guess. I don't know, but that's a kind of a different. I would more be. I think I'm more of a squirrel myself. I think a squirrel that's my choice. I'm more of a silver squirrel. I don't know about a hippo, but maybe you're referring to Powell or something. I don't know. That was kind of an odd one, but thank you for the super sticker. I appreciate that. Go down a little bit. Havoc says, student loan forgiveness is a problem, but I don't see near a problem of the uproar over PPP loan forgiveness that there should be thoughts on this. Both of them are bad. I mean, just because one's worse than the other doesn't make the one right. To me, I think that this message is worse because it's a message to children. I think it's worse because it's telling children that you don't have to pay the consequences of your actions. I think it's worse, the college, not in a dollar amount, but in a damage to society amount, because you're still going to subsidize these college systems, and these kids aren't learning their lesson. They believe, and it's making, and I've been on like these like, I'll go through reels or whatever on Instagram, and I spend so much time on those reels and stuff. And you're not following me on Instagram, by the way, at Rob Sultan on Instagram. A lot of cool content I post on all the stuff that I collect and stuff that comes into the auction house and stuff. I give kind of the first shot or first reminders there on Instagram. Even like for this live stream, I let people know, because sometimes YouTube doesn't notify you. So I use the little story on my Instagram. So like if you look at, so like this is my Instagram at Rob Sultan on Instagram. But if you notice, if you follow me on Instagram and you click my little story right there, I always let people know when I'm going live. So then you get another notification. If you follow me on Instagram and you want to get a notification of when I go live or when I post a video or the stuff I collect or things in the auction house and stuff like that, at Rob Sultan on Instagram, shoot me a follow there. Not a lot of love on the business Instagram page. I think it's because people don't want their people to know that they're interested in that item so that they can get a better price on it when they're bidding or something. But if you show some love to the business account, that'd be cool too. But shoot me a follow over there on Instagram. If you're not following me there, I try to get back to as many DMs as I can on the Instagram as well. If you want to reach out to me for something, again, anybody that wins an auction over $1,000, I personally call you. So if you want to get a hold of me somehow, here's Bite Hunter is in the house. Bite Hunter in the house is the one who was actually talking about this yesterday when we were talking about how college is a scam. Bite Hunter was in the house and talking about how they paid $15,000 to Indiana University. So let me read this here. I earned an associate and Bachelor of Arts in Indiana University, and all I did with it was make cringe videos on YouTube. Avoid college universities. They are not worth it. This is an individual that also, commendable, paid off their $15,000. So we talked about this in the last live feed, and I appreciate you being here again, Bite Hunter. And the thing is, it's like my YouTube channel, I'm not the biggest YouTube channel out there, but we have quite a few people in this live stream. We have 350 people in here, but we only have 200 likes. I see you. 350 people, 340 people in here, but only 200 likes. Killing me. They're not going to let my videos get out there to more people on YouTube. I know it. It's because the people won't hit the like button. Would appreciate it if you hit the like button. Anyway. But what I was saying is, like, this, learning how to do the sound on here, learning how to do all this stuff on the YouTube channel, all this is, I wasn't taught how to do this. I have no college experience on building this set, this set, like this fancy stuff on the walls that I put up and the lighting and all of that and the crystals. I just like crystals, and I like the kind of symbolism behind all of this and everything. It's like, I taught myself for free on YouTube. And it's also the way that I learn myself. If somebody's telling me how to do something, like, I'm immediately, like, if it's a situation where, like, there's a professor and they're making me do it on their timeline, it's less about them telling me, but more about them making me stick to a timeline that I don't agree with. I want to be able to learn stuff at 1 a.m. I want to learn, whatever, any given time I want. I want to wake up in the morning, have a coffee, learn whatever I want, go to the gym or whatever, and then learn whatever I want. And I don't want to be tested on the stuff that I want to learn. If I want to learn it, I want to learn it. I don't need to be tested on it. I wanted to learn it. I don't need to be tested by YouTube on, did you create the set right? Is your audio quality good? Did you do, I don't need any tests. I just want to do it. I just wanted to learn it. And so I think that that's a weird thing that they do with colleges, is they make you have to be tested on everything. I don't understand that. If you want to learn it, you want to learn. Anyway. Bite Hunter, I appreciate you being here, and I appreciate that very generous super chat. Thank you. It's really cool to hear from people that actually did go to college and are saying, the truth about how they feel about it. Blowing Haze is like, my guy went on a Kanye rant. I don't know if I was that out there with this, but I think what I'm saying is facts. It is what it is, but maybe a little bit. I think Kanye gets a bad rap. You know, he's got a lot of crazy stuff happening to him. You know, if you get put in that household, I mean, I don't know how anybody could stay sane. So, feel sorry for that dude sometimes. Bring back the like pillow. Hit the like. You know what? I do have the like pillow down there, VT. I do have the boom. If you could hit the like pillow, I'd really appreciate it. But I still got it. It's down there. I even can one up that one. I can one up that one, VT. Not only do I have the like pillow, but now I even have a subscribe pillow up in here as well. So if you're not subscribed, you can hit the subscribe and the like button. I got both. There we go. If that doesn't make it worthwhile, I don't know what will. There we go. I was gonna put them on the wall or something, but it seemed too cheesy to do that. But I do have those down there, so I appreciate you bringing that up. J. Allen Photo Art in the house gave me a very generous $20 super chat. Says, nice channel. Yeah, the government has no issue forgiving money they stole. Sorry, the comments are going up. Yeah, the government has no issue forgiving money they stole from the taxpayer, but you'll never see them forgive anyone's medical or IRS debt. Only the taxpayer eats it. Very, very true. And that's a good point to bring up here is the U.S. debt clock. When you talk about the debt clock being at 31 trillion, literally just under $31 trillion, it's pretty insane. It's pretty insane. So I couldn't agree with you more, Jay Allen, on that. And here's another thing to bring up as well. You know what was also in that Inflation Reduction Act? 87,000 new IRS agents. Well, how many billionaires do you guys think are out there? If it's all about taxing the rich and not the middle class and the poor, why do you need 87,000 agents? That's like a whole Super Bowl audience. Literally, if you look at a Super Bowl audience, it's almost the whole Super Bowl audience there. Why would you need them to have guns? Why would you need 87 agents that are armed? 87,000 new agents that are armed. Well, I'll tell you why. Because they're going to come after you. They're not just going after the wealthy. They're going after you and I. Because somebody's got to pay this bill. And they're just adding more and more and more to it. So how do you indoctrinate a society? Well, you keep adding more and more and more to the bill. And then you have a situation where you then have to enforce to get the money out of it, out of these individuals, to squeeze the money out of the population to pay this overwhelming bill that you've created. And this is what Keynesian economics causes. It causes a situation where they can just excessively print the money however they want. And it's somebody's got to pick up that tab. You can't just keep kicking the can down the road, as now Powell has found out. Powell is now coming out and saying, hey, we got to raise the federal funds rate quite a bit, but we all know what happens when they raise the federal funds rate. When they raise the federal funds rate, it causes a recession. It's that clear. It couldn't be more obvious. So that's blatantly what's happening right now. KR says, found you today and subbed. I appreciate you. Diesel just subscribed. I appreciate you. Thank you. Getting pretty close to 30K on the channel. I think I'm at like 20, almost 29K on the channel. So anybody that subscribes to the channel, I really appreciate it. If you click that red subscribe button. If you hit the like button, I really appreciate it too. Helps my videos get out there to more people. Getting a lot of people saying they subbed. That's awesome. Maybe YouTube's actually pushing my content a little bit right now. If we're getting enough likes or something along those lines and it's getting my content out there, I hope that maybe sometimes I say a little bit of stuff that's a little bit out there, but hopefully that this information is valuable to some people, because I just don't think that when you go to watch the Fed Chair Powell, so when I pulled up that video earlier, it's like an 8-minute clip. It's an 8-minute clip to talk about such a dramatic thing like inflation, what's going on right now. It's not enough time. That's not enough time to do that. I mean, so it's like I want to be able to at least decipher what they're actually doing. And this is a chart. Powell wants to talk about the 70s and the 80s, but he'll never show you the chart of what the federal funds rate was in the 70s and 80s. So when he says, oh, he's making comparisons to Paul Volcker, well, Paul Volcker had to raise the rates to 20%, 22% at one point. Is that what you're going to do, pal? Because if you do that, we're done. We're done. You do that. And this is where inflation is at the same levels as it was back then if you use the same basket, the same CPI basket. So that's really where inflation actually is at the same rate that it was back then. And so that was Powell going to bring it up here? This is a chart Powell don't want you to see. Powell doesn't want you to know what happens when they raise rates like this. They're doing it in a dramatic way, and they're doing it fast, and then that literally causes recessions. There hasn't been a single time that they've done a dramatic raise in the rate that didn't cause a recession afterwards. So I guess what I would ask you all in the comments is, like, what are you all doing about it? I've told you what I'm doing about it. I've shown you my auction business. I've shown you my cash flow based business. I'm curious what you're all doing about it. You know, I want to see more comments on what you all think. It's not just about the precious metals. It's not just about where your investments are, although I do believe strongly in having custody of precious metals and actually owning the asset, not an ETF or anything like that, but owning the real thing. But what are you all doing about it? I want to know. Because it's maybe people in the comments, you guys can learn from each other a little bit. It's not just about me ranting like a madman on here, but sometimes it's good to read the comments. The comment sections in these live streams is my favorite part about them. I actually go out of my way to click the comments to be on the video when it gets posted. You actually have to do that in the back end, otherwise the comments like disappear. So I like to watch the comments and go through the comments afterwards because there's some good information in there. The Fed pivot 2 weeks from now. You know, they might. The thing is, it's like they don't ever set anything in stone. They always give themselves some sort of escape hatch, if you've noticed. Like Powell, whenever he talks about stuff, like when he was doing the meeting, when he's on here talking about it, he always talks about like, well, if things get out of hand, we're going to do this. And if that something happens here, we're going to do this. But they never set in stone what they're going to do. They never say that, hey, we're going to get the rate to 10% or we're going to get the rate to 5%. They never say that. They always give themselves some sort of escape hatch. So could they pivot? Absolutely. They're already seeing the effects on the market. The stock market just plummeted based on what he talked about. I mean, if you look at what just happened, I mean, that's a pretty scary fall. 1,000 points on the Dow. That's a pretty significant candle right there. Dow dropped 1,000 points. The S&P down 141, both down more than 3% on the day, both showing significant candles down. I mean, if you're looking at this sea of red right now at the Fed, they're nervous about what they talk about there. So obviously, and he didn't even like give any real data. So this is the video that, I mean, we talked about it in the beginning of the live stream. This is the video that he talked about at the meeting today at Jackson Hole. But he didn't give like exact data. He said they're going to raise the rates. They're going to be more, they're going to fight it in a significant way. But he didn't say like, hey, we're raising it to 5%. We're raising it to 6%. Didn't say anything like that. So what would have happened if they did do that? How bad would the market have reacted if Powell went out there and talked about this? And then, like, what would have happened in this sea of red? How much worse would it have been if he said, hey, we need to bring the rates up to 5%, and we're going to do another full basis point hike, full 100-point basis point hike, and we're going to get it to 5%? What would have happened? Because he was very beat around the bush type thing in that video, in my opinion. You know, he didn't. He did address it, but he didn't say exact data points on what they're going to do about it. And we saw this significant of a downturn without knowing what's going to happen, other than that they're going to raise it. So that's crazy. Paul, you're right. He did say that. He did say the goal of 2% within a year. He did say that, but he didn't say how he's going to do that. He didn't say how he's going to do that. When he says 2%, he's not talking. They're already at over 2%. So the federal funds rate, they're already at 2.32% right now. That's where the federal funds rate is. So he's not talking about where the currently is. He's talking about, when he says get it to 2%, he's talking about getting inflation down from 8.5 to 2%. He's not saying how he's going to do that. But you're right. He did say he wants to get inflation down to 2%. He's not talking about the federal funds rate. He's talking about inflation. So if he's going to bring it from 9.5, well, it's probably a lot higher than 8-9% like they say, but say it is 8.5% or whatever like they say. To do that, you'd have to raise the federal funds rate to a minimum of 5%. minimum. And that still wouldn't even put a dent. You'd have to put it probably to 10% to make a dent. So if he's saying that and he wants to get it to 2% inflation, he's got to raise it quite a bit. But he didn't say how much he's going to raise it. So he might raise it another, say he raised it to 5% to the same level that they did right before 2008, 2009. Well, then what happened right there? I mean, and you have such a tight coil of all this free money that they had been giving out over the years that clearly this is going to be the worst one ever. The damage is, the longer of a period they were giving out free money, when the musical chairs finally stops, it's going to be a lot worse than it was here. They're giving out a bit of free money here, a bit of low interest money here, and then you raise it a little bit, 2009 happens. They've been giving away free money since, mid 2008 until now. I mean, over 10 years of giving away free money. Something's got to happen here. I would imagine that they start raising it. They probably do another 75-point basis hike and then another one after that, and they get it to about 5%. Triggers a major, major recession that we're probably already in, but it actually, we feel serious effects where the stock market really crashes hard, and then they could pivot at that point and start money printing again. They might start QE back up. They might go to negative rates. We're talking about high rates. It's like it could go to such a bad, because every single time, what happens when you go through a recession? So this was the last recession in 2008. That's when they drop the federal funds rate. They raise the federal funds rate when they feel cocky, when they're feeling, what's the term? Hawkish, I think is the term. But I'll just say cocky. When they're feeling cocky, they raise the rates, and then when they're feeling scared and the economy's crashing, that's when they drop the rates and they give away a bunch, and they do QE to infinity, and they make it super cheap and easy to get money. So that's what they do. So they've already used up that tool in their tool chest for the last 12 years. No, like the last 14 years. And now they're raising it up again, going to trigger another recession. And when you do that, they might even drop it to negative rates. They might just do a full-blown like Weimar Republic type thing, and just print money to the moon. You never know what they're going to do at the Fed. But one thing is certain. If they keep raising the rates, odds are they're going to cause a very, very bad recession. It's just a matter of what's happening. Miscellaneous gave me $1 super chat. I appreciate that, Miscellaneous. Thank you. And it just says from Miscellaneous. So appreciate it. Then down here it says, look up Yuri Bezmenov, KGB propaganda defector on YouTube. He warned everything that has happened. Oh, you know what? I did see that video. It's an older one, right? That's a pretty heavy video, actually. Because they talked about like how they eat you up from the inside out, and it's a long plan, for multiple decades to make societies kind of crumble from within, and it's hard to argue with what's happening right now. Like, I don't know if I was trying to come up with a diabolical plan to crash the economy and like mess up everyone and have inflation go to the moon, I'd do exactly what they're doing. I don't know if I'd come up with as good of an idea. Come out with bills that say inflation reduction and then spend $400 billion on like windmills. I mean, it's pretty unbelievable the stuff they get away with. And then Pelosi, you got Pelosi's own husband, that talk about the DUI thing. You forgive the DUIs for them, right? The wealthy individuals, they get forgiven. Nothing happens to them. It's crazy. But yeah, the system, it really does seem like that video that you're talking about in the comments. I'm a little bit nervous. If YouTube's throwing me a bone and promoting my content, I gotta dance the fine line right now. But people in the comments, look up what he just said. That was a very interesting video. I did watch that video a little while back. I know exactly what you're talking about. And it's the other interesting aspect is you look at like TikTok. Like I went on that platform one time and I did one video on that platform. It got like 600,000 views, and I was like, I probably should keep going on it because it got so much views, one of the videos I did on it, but the platform just seemed to me like it was taking time away from me. All these little short clip videos of like information that was like not even really worthwhile. There was nothing. It's just like a thirst trap type thing over there. But then you look at like in China, I believe that their version of TikTok in China, or whether it's TikTok or not, they like teach engineering videos and stuff. And it turns off at a certain time of the night so kids don't watch it too late. And they're like they're letting it go out to us and be like all 24/7, 365 with all this crazy content. But with them, it's talking about like engineering and all these different things. It's very interesting what's happening with social media over in communist countries versus social media over here. Something to think about. But I agree with what you were talking about in regards to that miscellaneous. That was a very interesting video on what's his name, Yuri Bezmenov. Yeah, you're right about that. I believe the Federal Reserve is a sophisticated, secretive group that makes an effort to learn the lessons of. I don't know, Noah. I don't know about that. Design Girl 33 says, "What is your opinion of China's economy and how will it affect us? They make everything." It's a really good point to bring up. Well, the U.S. doesn't make much. We consume a lot, and we print a lot, and the Chinese economy makes a lot, and we tend to like use these scapegoat tools to try to mess with inflation, mess with the economy, things like that. And if you want to fight inflation, like if you want the price of gas to go down, you got to pump more oil. You don't build windmills to lower the cost of oil. That's what they're doing. But if you want to lower the cost of oil, you pump more oil and you make yourself energy independent. If you want the price of shampoo to go down, you make more shampoo. And then there's competition, and the competition happens and it lowers the price of shampoo. It's like if you want the price of college to go down, you don't subsidize it and you let colleges compete for the people who will pay for that. If you subsidize it, then they have no value for the money that they're putting up to go into these dorms. If you subsidize it, that's why the price is so expensive, is because they go, here's $100,000, go spend it however you like. But if you had no subsidization, little tongue twister there, the college kids would have to be more selective and more picky about how they spend their money. And then the colleges would have to compete for that selection. It really is that simple. Any event of scarcity will cause the value to go up. Any event of adding to that pool and then adding competition to that pool will make the value go down and the product quality goes up. So it's interesting. The more competition happens, the more the quality goes up and the price goes down at the same time. That's what happens when you add competition to the mix. So if you want college to go down in price, you add competition to the mix and you don't subsidize it, and then they compete and they have to have more value proposition for the people to go there. Why is my auction house succeeding? I built my auction house here, Mineral Exchange. So if you're not registered, by the way, if you're watching this video and you're not registered, it's free to register. And if you want to, I feel like this data could make people a lot of money. The guy who found those yellow daisies sure is happy about the data, I'll tell you that much. But if you look at the auction history now, like you can actually see what stuff goes for. So if you see one of these bars in your local coin shop or whatever, you might be able to make good money by auctioning it off. But why is my auction house succeeding? Because I competed. You think I could compete with the big auction? There's multi-billion-dollar auction companies right now in the U.S. and all over the world, like Sotheby's. All these different auction houses are big, and they're more in art and all these different things. But how can I compete with these auction houses? Well, I could cut their prices by literally 2/3. That's how I can compete. So when I compete and I do a 10% rate and I do a 10% buyer's premium and no cost to consign, what's going to happen with me? Well, I'm going to get more business. And now they're going to have to act more competitive because there's a competitor out there. But my overhead is so low that I can compete. So they're going to have to find a way to lower their overhead, or I'm going to get more of their business. And it seems to be with the rare bullion market, I'm getting more of their business because the people don't want to pay, more fees for less money. And so if I'm getting more and more exposure on their items for a lower price, and this is, I guess, this is a shameless plug, but it's exactly what I'm talking about here. I competed in the market by cutting their fees by 2/3. Most auction houses take a 30% juice. I take a 10% juice. So that's basically my way of competing in the market. Now, if I was subsidized and they were subsidized and we got money given us, that wouldn't happen. There wouldn't be somebody go, I'll do it at 10%. You're doing it at 30%, I'll do it at 10%. 10% works for me. There wouldn't be that if you don't have a free market moving. So that's basically my way of saying, go register to my auction house. Check out all this crazy stuff that's on auction. All of it's no reserve. All of it starts at $0 every Monday, ends every Sunday. That's my shameless plug. If you want to support me, sign up for my auction house, mineralexchange.com. It looks like this when you first go to the website. You go here and then you click enter, you click register, and you make an account. It's free to make an account. So you just click register and it's free. You got to verify your email, and that's it. And you have access to all the photos, all the photos, all the backlog, all the sales history. All of that is all free. If you want to bid, it's just $1 to verify your account, and then you can bid forever on that. And you want to verify again. That's that. That's what I'm building. But anyway, that's what happens when you have competition. So the question that was brought up was, what do I think is going to happen with China? I think they're going to force people to start paying them in yuan. I think that's what's going to happen. I think that they're going to be in a position where they force people to pay them in their currency, and that's what Russia's doing as well. So they have the oil, and now we're going into the wintertime, which they sure timed that out perfect over there, because now when you go into the wintertime, what does Germany need in the wintertime? Russian oil, quite a bit of it. So the European, market for oil really is kind of in a stranglehold by Russia, and it's going into the wintertime. And when it goes into the wintertime, it's going to be different. So what is Russia doing? They're saying, oh, you can only pay us in ruble. We're not holding any dollars on our balance sheet. You can only pay us in ruble. That's what Russia's doing. And what did that do? Well, here's something interesting. You should see the price of rubles plummeting. I mean, that's what happened when they first invaded. The price of ruble plummeted. But what happened? Why did it rebound? Because the world realized, oh, wait, they got oil. They got a lot of valuable resources that we need. So we got to pay them in rubles, I guess. And now the value of the ruble caught right back up. It's actually much higher than it was prior to them doing their invasion. So what does that tell you? The people with the stuff call the shots. Why do we believe if you don't hold it, you don't own it in precious metals? Because the people who own the silver call the shots, not the people who own the ETF. So Russia has the oil. People need the oil, so they call the shots. China makes a lot of stuff. People need a lot of stuff. They're calling the shots. So they have a lot of problems in their own economy right now, which would need to be addressed, but they certainly produce more than anybody else in regards to stuff. So their economy makes stuff, which puts them in a powerful position to accept what currency they want to accept, or to, in that kind of a way, they might make people start paying them in yuan, things like that nature, which is what Russia did with their oil. So it's scary. It's scary to think about because, we're not making too much stuff in the U.S. The U.S. is a consuming environment where we just consume and consume. We make a little bit of stuff here, but nothing like that. The funny thing is we have a ton of oil here, tons of it, tons and tons of oil, yet we're not drilling it. We should export our oil to our allies over there in Europe, so they don't have to be in a stranglehold by Russia. We should be using all the oil that our resources here. Not only are they not making us energy independent like we were, but they're also draining our reserves. They're draining our reserves that are there for crisis. They're not there to lower the price of oil down a couple points. It's there for a crisis, but they drain that. It's like, how bad do you want to put the position of the U.S.? How bad do you want this to happen? Then go to the Saudis and beg the Saudis and OPEC. That's not the American way. The American way isn't going and begging people for stuff. The American way is take care of our land and make ourselves energy independent, ourselves powerful. But this is like going and begging the Saudis was like an embarrassing thing I saw. When that happened, like begging OPEC to lower prices and things like that it's embarrassing. As an American, I look at that and I go, we got plenty. Put the Keystone back online, get as much oil as we possibly can. And by the way, just because we don't pump oil doesn't mean other people aren't going to pump oil. They're still going to pump oil. And last time I checked, we're on a enclosed earth. The earth is enclosed, so the oil over here on the earth affects the earth over here. So just because you don't pump oil on one part of the earth doesn't change the fact that they're pumping oil on the other side of the earth. But oh no, we're good here. But no, the problem that people don't understand is oil is very cheap energy. it's hard to compete in the energy market if one is allowed to pump oil and the other one isn't allowed, and making it harder to pump oil. It's not fair competition because we're so focused on these renewable energies. And I like a solar panel. I got no problems with a solar panel. I think a solar panel is a great thing. I just know they're very expensive and it'll take time to implement them. So I believe in pumping as much oil as we possibly can in a safe, efficient way in the U.S. Maybe don't do it in the oceans anymore. Try to do it in safer places and make ourselves energy independent as well, the way that we should be. But I think that this is a little bit of a rant when somebody just asked about what I think about, China. And I think that they're in a very good position when it comes to how much they produce versus how much we produce. And I think they probably will start making us use their CBDC or something like that to pay them for their products. Their exports might have to be paid for in digital yuan or something like that, just like Russia's doing with their ruble right now. And obviously by this chart, you can see the ruble did very well because of this. If it wasn't for what they did, they also did a little peg with gold and stuff as well in addition to that. But mainly I think that this recovery is due to the fact that the world had to realize, oh, wait, we need Russian oil and we need Russian products, so we got to use rubles to pay them. And then it recovered the price of the ruble. They're playing chess. In the U.S., we're playing checkers over here right now, and other countries are playing chess right now, and it scares me. As an American, I'm scared for my country. I'm embarrassed that people don't have the foresight to see what's happening right now. It's embarrassing, quite frankly. And I don't think that the dollar deserves to have this kind of strength right now with the way that we're acting as a country right now. You just have the Fed chair going out there saying they need to raise rates and they're possibly going to cause a recession and we see a strength in the dollar. No, this is not strength. This is not people that are saying, and this is what I'll end this video on because I don't want to do these live streams longer than 2 hours. We're at an hour, 45 minutes. But the last thing I'd want to say in this live stream, because I tend to ramble and rant a little bit, and but the last thing I'd say is this is not people investing in the dollar. This is not people going, I think the dollar is a good investment. I'm going to hold dollars, and that's why the dollar index is showing all this strength. The dollar is not being seen as a good investment. What I think is happening is people are afraid right now, and they're sitting on their dollars like they're hot potatoes that are about to burn them, and they're looking for something to throw their dollars at. And inevitably, what happened in 2008, what we talked about earlier in this video, in 2009, I think the DXY will fall and collapse, and I think that it'll flood into precious metals and safe haven assets. That's what I think will happen. And it could be very bumpy in the near term, but I do not see this as strength. I see this as weakness. I see this as fear. People are fearful and they're holding dollars out of fear, and that's why you see the M2 velocity. If the M2 velocity had stayed straight and it just kept, people kept moving their dollars around and you also saw strength in the dollar, that's one thing. But when the M2 velocity goes down and people are not spending their dollars, at the same time you're seeing the strength go up in the dollars, that just tells you people are hiding their money under their mattress in fear. That's what's happening. And so that's what I think is the overall sentiment of it. And eventually, when the dollar index does fall, these safe haven assets are going to skyrocket. And they're so undervalued right now that they could skyrocket in a very big way. So that's my take on it, on what could happen. PMAC gave me a $5 super chat. I appreciate that. PMAC says, this winter, rate hikes decreasing, Russia ruble demand, DXY top dip. This will cause a crypto leg up. It's possible. It's also possible, like right now we just saw that that Bitcoin fell with the broad market as well, but also precious metals fell as well, so there's that as well. And actually metals fell pretty hard in addition to the market falling. But the interesting aspect that when we say crypto, I personally only believe in Bitcoin. I'm not a crypto person. I believe in Bitcoin. It's the only one that I'm willing to take a risk on myself. But people see Bitcoin as more of a tech stock. So when tech sectors are falling, a lot of people don't understand that you can take custody of your Bitcoin. And it's a digital layer of money that you can have your own custody of, which when you understand how the custody of it works, it shifts the dynamic in your mind of what this asset could be, because you realize, oh, wow, a decentralized digital layer that I can have custody of is very interesting to me. But not the broad market isn't informed on that. So it tends to fall. So if we saw a situation where the stock market plummeted, I'd imagine Bitcoin falls with it. And then eventually maybe more people learn about it and learn about how to take custody with it. But there might be near-term pain if we saw a stock market crash with Bitcoin. Doesn't get me excited. I still have quite a bit of Bitcoin, but that's how my kind of rational way of looking at it myself. But I don't know if it'll cause a leg up or not in crypto. I think that if the DXY plummets, I think the price of precious metals will skyrocket, but I can't say what will happen to Bitcoin or what will happen to crypto on that. But I appreciate the super chat. Diesel Kane says cold storage wallets are easy to get used to, or easy once you get used to it. I agree. And once you use a cold storage wallet for the first time, it opens your eyes on what it is. I think too many people comment on Bitcoin. Like, I wouldn't comment on Bitcoin before I built my own node, before I transferred it into my own cold storage devices, played with like 5 different cold storage devices, and I went, okay, this is pretty interesting. It's a much better wire transfer service that I can have custody of. Okay, I could see this here. It kind of hit me once I used cold storage with it, but not enough people know about it for some reason, and I plan to help with that in the future, make videos about it or something. But with all that being said, everybody, this has been a great live stream. I really appreciate everybody being here. If you could hit the like button really quick, would really appreciate it. If you hit the subscribe, would really appreciate it. If you register to my auction house, would really appreciate it. And there's a lot of free information there where people are making a lot of money. I'm gonna inspire a whole team of people around the states to be finding rare bullion and making money off of it like I used to in the very beginning. I really am. Like, the guy who found those yellow daisies is now going to be literally, this individual walked into a pawn shop, if you can believe it, bought these items for, a few $100s or whatever it was, and is going to probably profit, upwards of $3,000 plus. So that was all from just watching the channel and watching the auctions and things that I'm selling on there. And you can see the price histories on stuff, and you can find out what's rare and what isn't. Plan to add a lot of rare coins. Like this week we have some rare coins on the block. But all of that information is free. All you got to do is register and put in a valid email, and you can make an account. And you can then see all of the price history on all the auctions and all of that for free. I think WorthPoint charges like $20 a month. Maybe I should be charging for this data. I want to give people an incentive to check out the website. So it's all free. The data is free. And so price history is free, and it'll always be there. I think eBay gets rid of price history in like 3 months or something like that. But with my price history, it'll be there forever. And it'll always be free for the price history. So if you want to check that out. But thank you, everybody, for watching. Apologize for all of my rambling and my craziness, but hopefully there was some worthwhile information here. I really wanted to dissect what happened with the Fed meeting, or the Fed. It was more of a Fed talk today at the Jackson Hole talk, and I hope that this gives some more insight on what's going on behind the scenes, sort of thing, and like what it actually means to raise the federal funds rate, how high they actually have to bring it to be, competitive to what like Paul Volcker did in the 70s and 80s. Or specifically in the stagflation crisis of the early 80s. We're in that right now, I would imagine. Right now that we're in a stagflation environment, literally as I'm making this video right now. And so they need to make a decision on what they're going to do. And it seems like they're going to keep hiking rates. And what's scary is if the market's willing to fall this much off of what they just said, imagine when they actually do it. Imagine when they actually do raise the rates a full percentage point, or, another 75 basis points hike, and they keep doing that, and then it triggers a recession to be far worse than the current situation that we're in. I think we already are in a recession, but I think that they're probably going to cause it to be much worse. And when it starts falling, I imagine they might pivot. They might change their sentiment and start printing money to oblivion again. You never know what the Fed's going to do, but as of right now, it looks like they're going to pour gasoline on the fire. Thank you so much for watching. Please do subscribe to the channel. I'm trying to grow my channel. If you want to share my videos, would really appreciate it if you shared them on social media or anything like that to try to get this message out to more people. If you want to follow me on Instagram, would really appreciate you following me on Instagram, at Rob Sultan on Instagram. That's it. Thank you so much for watching. See you at the next one. Signing out.